Yeah, hi. Good afternoon, everyone. On behalf of Equirus Securities, I welcome you all on this second quarter FY23 conference call of Rolex Rings. From the management side, we have Mr. Manish Madeka, who is the MD, and Hiren Doshi, who is the CFO. Without further ado, I hand over the call to Mr. Hiren Doshi for opening remarks, followed by a Q&A. Over to Hiren bhai.
Thank you, Mr. Ashutosh. Good afternoon, dear investors. First of all, would like to wish you a very happy new year, wish you a very prosperous new year. Stay safe, stay healthy. Heartily welcome all of you in the investor call on quarter 2 as well as first half of fiscal 23. Taking you to the certain financial parameters and numbers for the first half as well as quarter 2. Would like to begin with that revenue from operations in this quarter 2 of FY23. It was more or less same what we had in quarter 1 of FY23. We have recorded revenue of almost 290 crore rupees, which was 287 crore in quarter 1. Coming to EBITDA, as we have already indicated that EBITDA would be in the range of the somewhere in between 22.5 to 23.5%. We have recorded revenue of rupees 69 crore in quarter 2 of FY23, which is in terms of percentage, it's 23.5% almost. As we have already informed, that company has just opted new tax regime from this fiscal, so that to reduce the tax burden. In this quarter 2 FY23, company has recorded almost the same PBT, which was 60 crore against 61 crore almost in quarter 1 of FY23. In terms of post-tax profit, it was 49.7 crore in FY23, first quarter of FY23. And again, the same 49 crore, 20 lakhs in quarter 2 of FY23. In terms of product mix, as we have indicated, bearing rings, it's almost 53% of total component sales, and auto components bit increase, which is 47% of overall component sales. In terms of exports, it is almost touching 60% exports and 41% domestic, including certain other income and scrap revenue, etc. Would like to inform that many of the new customers have already awarded certain program, which partially it is going to be started in Q4 of this current fiscal and in a bulk way in FY24. Further, we are looking, or rather we got many inquiries in terms of bearing rings as well as auto components in both the segments. Bearing ring, again, we are happy to get the couple of new customers who are completely non-automotive bearing manufacturers, and they have started gradual supply from this quarter onwards, and it would be in a month in next quarter. As you better know that commodity pricing was quite fluctuating till last quarter, and now we expect it to be stabilized, and we also expect that marginal reduction from here to the some extent in commodity pricing. Your companies are using alloy steel bar, which is having commodity impact. In terms of our cost reduction measures, what we have informed earlier, that company has already installed, or rather almost on the verge of installation of ground mounted solar project to the extent of 16 megawatt. Out of that, partial is at the 90%, 95% of completion, and preferably will be able to install it a 4 megawatt ground mounted solar by December 22, and the remaining 10 to 12 megawatt by March 23. Further, would like to inform that company has quite good cash flow, operating cash flow, and they have maintained it in a very optimum way which is beneficial to the company, and the company is in continuously process to reduce the long-term as well as the short-term debt. As you know that long-term debt, hardly it was 17 crore as of September 22 numbers. And again, further company has almost another 2 crore rupees have already been paid off. So today, as on date, we are sitting on a long-term debt of hardly 15 crore, which down the line, maybe 12 to next 9 to 12 months, we are inclined to repay off, and company would be completely debt long-term debt free in next fiscal. Apart from that short-term debt, what it was there in last fiscal, again company has maintained the momentum, or rather the same level of operations, wherein which help us to reduce the working capital burden also. And it's almost significant, you can say more than 20% of March 22 level, company has reduced their working capital utilization. All put together, as on September 22, company has a debt of less than 150 crore. In terms of product segmentation, almost 42% goes to automotive sector, 24% that goes to the industrial application segment, 29% that is heavy commercial vehicle, off-highway vehicles, commercial vehicles, and so on. And again, the 5% goes to the hybrid vehicle and EV segments. In terms of comparison of total revenue of operations, fiscal 22 was ended with 1,017 crore. This first half we have ended with 577 crore, which is having somewhere about 60 to 80% growth on an annualized basis. And we would like to be aspiring to achieve the numbers what we have estimated for this current fiscal. In terms of EBITDA, it was 240 crores in FY22. In this first half, we have already achieved level of 140 crores. PBT, it was 121 crore in this first half. Vis-a-vis PAT is 99 crore. And in FY22, profit before tax, PBT was 194 crore, whereas PBT was 132 crore in the entire year. Against that 99 crore company has already achieved in the first half only. Operating cash flow, as I was mentioning, company is having quite good or rather strengthening the cash flow position. The operating cash flow during first half, it was 86 odd crores. Out of that, company has spared 27 odd crores for the capex of various furnaces, machining lines, other miscellaneous equipments, and the remaining part of the solar ground-mounted solar project. As mentioned earlier also, that company has maintained or rather reduced the debt level significantly, which was in FY22, it was all put together, net debt was 203 crore. In first half only, it is 146 crore. So more than 50 crore have been reduced in the first half. It is a mixture or a combination of long-term as well as short-term debt. Return on equity, again, it has gone to 27%, and we inclined to this FY23. Again, it will increase to the extent of 7-8% of this number. We have worked out annualized number 27% on the basis of the numbers of first half. The detailed financials and the operating numbers, balance sheet numbers, cash flow, we have already uploaded and circulated. Even it has been published into the newspaper and communicated to all. This is all from my side. Thank you very much for patient hearing. Now we can open this session for Q&A.
Thank you, Hiren sir, for that detailed opening remark. We'll start the question and answer session. Anyone who has a question can use the raise your hand option. Once you are done asking your question, you can lower your hand. We'll wait for a couple of minutes till the question queue assembles. Yeah, we have a first question from Mr. Aman. Please unmute your line and ask your question.
Sir, thank you for the opportunity. A few questions from my side. So first of all, if you can touch upon how the outlook is in terms of exports, and are we facing any issues like in terms of slowdown and quantity reduction from our customers?
Yes, we are not facing significant reduction or any kind of downfall for overseas business. Yes, definitely from certain European customers, they have reduced their volume, and they have deferred certain their lifting plan at least for a quarter or something, which was to the extent of 20-25% of that particular customer. But at the same time, we try to add new customers in from that territory or from the European market only. Though they are also what they have, asked, say, for example, the 100% component, and which they defer to the extent of 50% or something like that. So because of their lifting and managing the other customer lifting, we are able to maintain the momentum, or rather the continued run rate of almost 100 crore per month. But we expect some bit of not significant marginal impact from European market in this quarter also. But at the same time, we are getting good demands and this thing from the domestic, even from the US region.
Thank you, sir. That was really helpful. Just a related question on that. So we have not been reporting any new order wins for the last 2 quarters. So if you can quantify if we have won any major orders and the amount relating to that, like how much is the total order value if we have won any major orders over the last 2 quarters.
Yeah, as we communicated, definitely we didn't have a new customer or rather the program awarded in last couple of quarters. But definitely there are many things which are in under process, and even couple of European customer, couple of US customers, just because of their conservative approach, they are holding certain project or rather just moving in a gradual pace. So that's why the certain projects or certain programs got deferred. But we are getting good inquiries, and we expect it to be converted in the next fiscal. And the programs what we have been awarded in the last quarter of last fiscal, even in the first quarter or something, that those will be started from the end of this current fiscal and early or first half of next fiscal. So that would be there. And overall, what we are expecting to have an incremental revenue, at least 15 to 20% of my current revenue level in the next fiscal from the new customers.
Understood, sir. And just on this raw material thing, like how much of this has been in our revenue and how much it could affect us, like the decline in raw material prices in the next quarter or so, like when it passes through me?
Yeah, as we have communicated, it is 100% pass-through mechanism. But the upward trend in raw material is completely, adverse to the downward trend, because the way the steel price has gone up, which is say somewhere about 30-35% something, but till now the price has not even reduced by 5%. So we didn't expect much of the reduction, maybe 3 to 5% more reduction on the steel prices, and which may not impact significantly on our revenue, and it will not affect our numbers.
And so just one final question on this tax rate. So during the first 2 quarters, our tax rate is somewhere around 18 to 19%. So even with new regime, it should be somewhere around 25%, right, sir? So what is leading to such lower tax rates for us right now?
I think you have considered the net tax rate, which is somewhere about 18%. But right, what we need to see is the current tax numbers, because the deferred tax, as you know, it is a book entry, and what I have already, because of this change of tax regime, the earlier accumulated deferred tax, which was considered as a 35% of marginal rate, and now it is 25%. So my effective rate would be 25%, my outflow would be 25% only. And I think we should consider the current tax number. which is almost 25% of my PBT.
Understood, sir. And by what time our actual accounting tax rate would also move to this 25% number? So towards...
Yes, we are accounting that only.
Okay, sir.
Yeah.
No, sir, I was trying to understand when this effective tax rate will move to 25% for us.
It will take, I think, again, we'll have certain deferred tax credit. It would be there in next fiscal also. So from thereafter, it would be at the marginal rate.
Understood, sir. Thank you and good luck for futures.
Thank you.
We have our next question from Mr. Sonal. Please unmute your line and ask your question.
Yeah. Hi. Thanks for taking my question. Good afternoon, sir. Sir, just on the product breakup of revenues, could you tell us what is the other operating income for the quarter, and what is the scrap sales for the quarter?
For the quarter 2, scrap revenue is almost 18 crore, 180 million.
Right.
Export incentives is almost 35.5 million. And my windmill power generation saving is somewhere about 23 million.
And any FX related benefit in the revenue line?
Yeah, definitely. In my other income, FX revenue is there, wherein the realized gain what we had. Many of our export invoices we didn't got discounted because my working capital requirement was not that. So we kept it open, and something what we have exported before, yet say 3-4 months back, where the dollar rate was 78 and today if we are getting the funds, I am realizing at the price of 82. So those kind of gain is definitely there.
But that is in the other income, not other operating income, right?
Not other operating income, obviously. It is there in other income.
Sorry, could you repeat the windmill number again?
It's 23 million.
23 million. And sir, when do we expect the solar plant to be fully operational?
Fully operational, it would be in next fiscal only. But we expect 4 megawatt that would be started from next month. And also probably the balance 12 megawatt something we are expecting by end of February or maybe in March 23.
Got it. And so what is the sort of benefit that we expect out of that?
If I'll tell you broadly the number of, the amount what I'm going to save from my electricity expense, it would be to the extent of 15 to 17 crores on an annual basis once we have entire this facilities installed.
And this is net of whatever the operating expenses for the solar plant, etc.
Yeah. Yes.
So, and this is okay. So, and we'll more or less retain this benefit, right?
Yeah, obviously.
Got it. Great, sir. Thank you so much.
Thank you.
We have our next question from Mr. Abhishek. Please unmute your line and ask your question.
Yeah, hi, sir. Am I audible?
Yes.
Sir, you are.
Yeah. So just a couple of things you mentioned about 15 to 20% of revenue growth going forward. Now, does that also account for the fall in raw material prices? So should we assume volume growth will be much higher than that? How should we look at it?
Yeah, definitely. But as I was telling you that we didn't expect much of the reduction on raw material pricing. If raw material pricing is reduced by 5%, if you see the net impact on my revenue numbers would be 2.5%, something like that. 2.5%, right? So definitely we expect, and the 15 to 18% number what I told on my existing numbers, that is what we expect from the new customers down the line from next, you can say next fiscal or from now to 18 months.
Okay. Sir, I was more coming from the fact that we've already seen a major correction in steel prices. but that does not seem to have impacted your realizations much. The raw material that you use, the corresponding decline in that has been much lesser. Is that a right way to look at it?
I'm sorry, can you please come again?
Sir, where I'm hinting at is we have seen almost a 25-30% correction in steel prices, but your realization seems to be stable. It has not seen much of a decline. So
let me tell you, sorry to interrupt. Let me tell you, in our commodity, the kind of steel what we are using, there we didn't have correction of 30%, 25%, 30%. It is hardly 5 to 6%. That's why it is not having much impact on my top line.
Okay. So the steel that you use, there the correction is only to the extent of 4 to 5%.
Yes.
Okay, got that. So the other thing is, you've spoken about, that, you are going to be adding new customers and other things. Are those mostly from the export market? Or are you also seeing good traction in the domestic market? If you can give some color at the bearing side of it.
Definitely, we are getting, good demand from the few of the domestic customers who are mainly into auto parts and with whom we have started business in last end of the Q4 only. And again, we are expecting a couple of my bearing rings customer who are in expansion mode, and they have also increased their, the overall projection, and they intend to be almost double in next 3 to 4 years span. I would like to request Mr. Madeka to just give some light on that.
Well, you may be aware that this railway infrastructure, Vande Bharat train and this and that. So there are two major manufacturers of bearing for railway. So we are expecting some increase in volume for railway bearing also for our domestic customer from January onward.
Okay. And sir, if you can help us understand with the capex, what is going to be a capex for FY23, and if you have a number for 24 as well?
FY23 for the full year, I would be ended by somewhere about 35 odd crores. Out of that, 26, 27 something I have already incurred. And for FY24, again, we didn't expect, or rather we didn't plan for any significant capex, but we may consider to the extent of 25, 30 crores.
Okay, sir. Okay, thank you so much for answering my questions, and wish you all the best. Thank you so much.
Thank you.
We have the next question from Mr. Bhargav. Please unmute your line and ask your question.
Yeah, good afternoon, team, and thank you for the opportunity. Sir, if you look at the domestic growth over the last 4 years, it has been at about 4%. Compared to that, the export growth has been almost 13%. Do you see this trend continuing going forward as well, where export will continue to outperform domestic, or do you think domestic can also sort of catch up?
See, we have recently added 2-3 new customers, and they are mainly for export in USA and European country. So I think the same momentum will continue, because our the facility what we have is for high volume and some near next step forging. So we are expecting the same momentum in domestic and export both.
And these new customers which you alluded you've added in exports for the US, are they new plant locations or are they completely new customers?
No, they are totally new customers.
Achha, totally new customers. And would they have...
and our existing customer has added a few new countries like Mexico, Germany, Poland. So existing customers, 2 customers also added 5, 6 their new facility in different countries.
And these new customers which you've added, they also have manufacturing locations across various countries or only?
Yes. They are multinational customers.
Multinational.
And they have plant in Europe. Even they have in India also, and US. It is a USA-based company.
Okay. Secondly, sir, we've been talking to customers in Korea and Germany as well for a long time. How has been the progress over there?
Yeah, that started already.
What would be the contribution in terms of overall revenue from them? It's very small as of now.
As of now, it is small. And again, Germany, it has started something in last quarter, but last quarter, that is the Q1. But again, in Q2, they got a bit declined. And but again, not having significant contribution as of now. But we expect it would be there from the maybe the last quarter onwards.
And lastly, sir, with this energy prices escalating in Europe, is there a case where we can get more and more business from this geography? Though there might be some slowdown in demand, but our market share could improve in Europe.
See, definitely the prices of energy has gone up significantly in European market, but at the same time they have reduced their production volume significantly. And as of now, they are considering India as an Europe plus one factor, but it will take some time, and we need to wait for next 6 to 9 months how the way things are moving in Russia, Ukraine. On that basis, but definitely we are expecting some good part, because as I was mentioning earlier that a couple of customers have already declared that they are going to shut down their facility in next fiscal, and maybe the things are going to divert it into their India plants. So we are expecting something from them also.
And how much would be the revenue contribution from Europe for us?
As of now, out of my total revenue, Europe is somewhere about 25-28%.
Sorry, sir, how much? 25%?
Sorry?
I missed the number, sir. What is the number?
25 to 27% of my overall revenue.
It's a big dependence on Europe. And you don't think
but it has been segregated to the various customers and even different segments.
No, because you alluded to demand slowdown over there. So will that not impact us?
We didn't expect, because see, till now what we have faced, or rather what we are getting indication, definitely the demand has gone down with couple of customers in a big, or rather more than 30-40%, something like that. Apart from that, the other regular customers maybe not more than 10 to 15% what they had earlier.
Okay, sir. Thank you very much, and all the very best.
Yeah.
We have our next question from Mr. Sayyam. Please unmute your line and ask your question.
Yes. Audible? Hello, am I audible?
Yeah.
Yes. So my question is that as per the CARE rating report, the latest report which they have published on the Rolex rings, there has been suspectable of profit margins and volatility due to the raw material thing. So my question is that why we are not going for a long-term supply agreements with the steel suppliers, since we have already the long-term agreements with the customers. So why don't we have long-term agreement with the steel suppliers to ease that volatility out? Or are we in the path of having some contracts like that?
No, as you know that all my vendors are being confirmed or nominated by my customers. And my customers are not giving me, the 100% confirmed plan. It is on the forecast for, say, overseas customer is giving me a forecast of 3 to 4 months, having maybe 5 to 10% here and there. But whereas if I am going to have something or contract with steel plants, the price fluctuation, it is always open. It is not like that they are going to give me the confirmed price for the next 6 months, and neither I am going to confirm with my customers.
So it means that volatility we have to face only.
Sorry, your voice is interrupting. Yeah.
Hello, am I audible?
Yeah.
So it means for the volatility of the steel prices, we have to get that there is no permanent solution for that. If right now?
No, we have to, and it is part and parcel of this kind of business. And price volatility, because customers are fluctuating their demand, and if something, say for example, they have given certain forecast, and if I have procured steel against, or rather I have committed to my vendors, I am supposed to manage my working capital cost, etc. And maybe my customer is going to pay me on the future price. So it is having some kind of volatility risk also. So it is obviously better to have open in terms from vendors as well as from customers.
And sir, can you throw some light on the capacity utilization? What percentage we are operating at?
As of now, we are at somewhere about 63-64% of my achievable or utilized capacity.
What time we will be like coming to the 80 or the 85% thing? What's the
it will take some time. Maybe next year our target is to cross 78-80%. I'm talking about fiscal 24.
Okay. And sir, what's the outlook for the order book for this quarter? Last time you were saying that we have order book of around 100 to 125 crores per month. But when we see the revenue, that comes down to 90 to 95 crores per month on an average basis. So what's the outlook for this quarter, since already October has been?
See, my average, this monthly run rate is somewhere about 97-98 crore, even as of now, as per reported numbers. We expect this quarter it would be again having a marginal, growth. And from the last quarter of this fiscal, and we expect some good turnaround from the next fiscal.
Okay, so then this quarter we should not expect much growth. Like it will be almost flat.
We target, or rather we aspire to the cross the 300 mark on the, rather the recorded number would be of 300 or so.
And sir, as per the half-yearly balance sheet published, there has been an increase in the other financial assets from 91 to 222 million. So can you please throw some light on that? What's that increase in the financial assets?
Sorry, please come again.
Sir, in the half-yearly balance sheet, the intent there is a column of other financial assets that has increased from 91 million to 222 million.
We are having certain cash, long-term cash or other fixed deposits there with the banks that has been added. Apart from that, the good amount of that bank guarantees yet to be received from the stock exchange, what we have given to during our IPO, that will lead me at this number.
So the last one, like we are seeing continuously increase in the inventory fund. This time also we have increased our inventory by 86 million. So are we facing order cancellations, or there is some supply constraints on the export side? Like
no, there is no order cancellation kind of thing. One of the major reason of fluctuation inventory, or rather having something abnormal number, that is because of certain accounting arrangement. As per Indian accounting standards, Ind AS, I'm supposed to, whatever the my components which are in transit or which are there in a warehouse, I need to move off from my sales and I need to book as an inventory. So as on the differential number of March 22 and September 22 was somewhere about 18 crore. So that has been added to my inventory level. And the prices of inventory, as we discussed, it has also gone up in the first quarter, second quarter. I am carrying certain inventory of the WIP, semi-finished goods, finished goods, and certain raw material. So that will give me some longer period, or rather the longer amount of inventory.
And sir, in the last quarter, there was an issue when the revenue was not as per the expectation. You said that there were some orders.
Sorry. Your voice is just. Please come again.
So sir, last time you said that due to shortage of the export containers, we were not able to export some of the orders and that cancelled. So this time also, is there any
those were not. Sorry, gentlemen, those were not cancelled. Let me tell you, those were deferred. even as of 31st of October, a couple of my customers, big customers of US, having a sales arrangement on X factory, my X Rolex kind of thing, they were not able to manage the containers and they didn't send me the 7 containers, which I did in the first week of November.
Okay, so do you think our business is just
There's a lot of disturbance in your lines, Ayam. I'll ask if you could improve that.
Yeah. So I'm saying that our business is not disturbed from that. It is only deferred.
Yes, sir.
Okay. Thank you, sir. All the best. Thank you, sir.
Yeah. So we have a follow-up question from Mr. Aman. Please unmute your line and ask your question.
So thanks for the follow-up. So just on the capex side, like earlier we have said that we can operate maximum at around 80% kind of capacity utilization, and currently we are looking for 75 to 80% kind of capacity utilization for next year. So like, are we thinking of going for a forging capex in next year, like or anything on that?
One machine we have already ordered, and that will be delivered by 23 December. So because these forging machines are very costly machines and delivery time is very long. So that we have already ordered the machine and we are expecting delivery by end 23.
So we are,
we have the facility having different capacity. So few of our capacity we are utilizing 85%. So
that kind of equipment we have already ordered in anticipation that up down the line 12 months, it would be rather 100% or more than 95% it would be utilized. So it would be a gradual capex for my forging expansion according to the, the current utilization or expected utilization of my forging lines.
Understood, sir. So in the capex guidance which you gave, like 30-35 crores for this year and the next year, so this is included, right? The machines which we are getting for the forging plant.
Yes. That we have included in the 35 crore number what I told you for the next fiscal.
Understood, sir. Just one final question, sir. So in terms of competition, like one of the listed companies has acquired one of our peers, and they are looking to get into this bearing rings manufacturing. So if you can talk about how we see competition and like would our business be affected? Like, can they take business share from us in future, sir?
See, we didn't expect much of the competition fear from maybe the transaction what you have you are referring. The kind of facility what we do have, the versatile range of the product we do have, the current product mix, and the customer base what we have, And
we are not only in bearing ring, we also make the automotive component also. In the facility, we have a very vast range of facility. And what we heard that still 5 years, the old promoter will.
So, hello?
Yes, sir, you are audible.
Audible, right. So, in nutshell, we don't expect much of the, competition as because of our strong association with our existing customers. And we are just, the new customers as we added and down the line also approaching to certain European customers who are having wide range of products and a bigger size of components, etc., which maybe that player is not able to produce or then do not have such kind of facility.
And the way the customers are sending the inquiry from Europe and USA, it's a very huge market. So it is not possible for any one of us to meet their requirement. So we are expecting within next 2-3 years, like one of our customers has already declared that they are going to stop their in-house facility and they have started working on that. And we are fully prepared for that. And now we have the cash flow, we can invest in capex also. So we don't see any threat from this.
Understood, sir. Thank you and good luck for future. Thank you.
We have our next question from Mr. Priya Ranjan. Please unmute your line and ask your question.
Yeah, thanks. So you just mentioned about you have ordered one forging setup so far, which will be delivered in 23. So what is the cost of that machine, if you can help us with that, and what kind of capacity in terms of what kind of tonnage capacity it has?
The overall cost of that, rather commissioning cost of that equipment with the incidentals and all this thing, which may be would be somewhere about 350 million to 370 million rupees, and having a capacity to produce almost 1100 to 1400 metric ton per month.
Okay. And is this the new? It doesn't look like it's a new machine. Is it the old
Sorry?
machine? Doesn't look like it's a new machine with this. Is
Yeah,
it like
it's
this,
a completely, yes, it is a new machine, and having, as a customized certain applications on customized basis, the kind of components what we are looking to produce from that equipment. On that base, it has been designed, or rather suitably modified.
Okay.
And it is from a very renowned, forging equipment across the globe. So, and we already have 3 kind of those forging lines with a different capacity for different set of products from that vendor.
Okay. So, and going by your, the machines and your gross block, it looks like, it's a lot of machines will go for repair or at least replacement cycle in the next couple of years or next few years at least, because they have almost lost the useful life of their operation. So how should we look at capex going ahead?
Not replacement kind of thing. We have, a very organized preventive measurement or preventing maintenance plan. We have our own in-house preventing management team, maintenance team, who are managing all these equipments, and all these equipments, as you better know, having a very big life, and certain equipments what we have installed before 18 years back, still we are utilizing at the optimum capacity. So there is a continuous, maintenance and maybe a refurbishment or some renovation kind of things. Those are going on as and when required. So we didn't expect that a replacement would be there. There would be an addition, and maybe to some extent having the discard or maybe the obsolete technology which we just had it, and those can be regarded or discarded, but not having significant value or effect on my operating.
Understood. And just one thing on you also said that there will be some offsetting factors like the new order wins, and there will be some reduction in the expected orders from the existing customers. So how should we look at it next year in terms of your top line? Will it be fair to assume it will be like, say, 10-12% kind of growth, or is it like, say, single digit growth?
Yes, definitely we aspire, or rather we expecting minimum 12 to 15% growth on the numbers what we will be having in this fiscal. And as we mentioned repeatedly, that no doubt there would be some kind of reduction on my existing customers or maybe the decline. But at the same time, the new customers, what we have started gradually, they will be coming with the big volume, or rather the big supply in next fiscal. So that would definitely be added. And as we have already indicated that certain things, as what you say, India shining, or maybe Vande Mataram, what my MD is just referring, those kind of things would be there in next fiscal.
Mm-hmm. And in terms of domestic bearing ring, if I look at the domestic growth, the bearing company has been very, very high. But your growth in domestic business ring has not been to the extent of what the bearing companies has done in India. So, what is the disconnect here?
Sorry, if I understood correctly, what you would like to tell, that the growth of bearing industry is less overall compared to my growth in domestic segment. Is it your question?
So domestic bearing companies growth, if I look at YOY, has been slightly better than your growth. So is it because of some price correction or something which you have done? Is because of that it's reflected in that number?
No, it's not like that. Again, the growth of bearing industry overall, you can say we are not there to cater entire bearing industry of India, or rather the kind of all bearing, the rings for the all kind of bearing. I do have a range of particular this thing, say up to 900 mm product what I can produce. So in that segment, the major players of India, rather say, who are contributing more than 80-85% to the bearing industry for that addressable segment, they are my customer, and there we didn't have any, reduction, or rather the not comparable curve, because the way they are growing, and I am also getting the same kind of participation over there. But definitely we cannot compare with the overall bearing industry.
Okay. Thank you. That's all for me. And I just last thing on the CDR part. So all the paperwork etc. is done. I mean, what is the status out there?
Till now we didn't got any this thing from the banks and the financial institutions. We have started just exploring, because we have some kind of very vanilla kind of arrangement or agreement with the bankers, wherein the probable liability of ROR may not arise, but we are just not touching on that point as of now, as we are waiting for something to revert from the bank.
Okay, thank you.
Yeah. So that was the last question for the day. I'd like to hand over the call to Hiren sir and Manish sir for any closing remarks.
Thank you very much for the investors and their team who have attended the call, and we are here, and we would like to assure you that the promoters, the management team is very much dedicated, and rather have invested their 100% dedicated efforts to maintain and to have growth line on the operations. And as you people are evidencing that the numbers or the indicators what we are giving, we are always trying to fulfill it, and till now we did it, and we hope better for the coming quarters, and definitely there would be a good fiscals down the line, FY23, FY24 and FY25. So your company would be having maximum utilization and having a quite attractive and more lucrative operating numbers. Thank you very much for joining.